All right, all right, all right. You are looking at the Nasdaq, a daily chart of the Nasdaq, and this market, knock on wood, as I bang my head, is behaving exactly as expected. And when I said that, some people on Twitter said, "What are you talking about?" Well, we had these three wave down correction, which was 12% peak to trough. That is a 12% correction. And then we had a follow through day on November 1 and pretty much a follow through day on subsequent sessions, but it rallied through its 50, got into a power trend. You could see it gapped higher on this day, and that's a day when, it's all full blast, pedal to the metal right there on, it was the benign inflation data. And I think at that point, it was up 2.37% at that point. The market had kind of baking in that the Fed was done with that data, and it continued higher and then pulled back a couple of days. The last 2 days of November, Wednesday and Thursday, it pulled back. And then on Friday, it pulled back to the 10 EMA and then bounced there on real nice volume on Friday. So technically, looking really good. As Phil Lesh would say, we'll take a step back, and we can see this big cup with handle pattern that emerged out of the big bear, the nasty bear market. Here you can see the cup and then the handle, and then since November 1, it's been full blast. So November was a beautiful month. And so I'll go to the monthly, and even there, it looks this looks real good. This cup, and then the 3-month handle there as it pulls back to a moving average. Blast higher in the month of November. Let me see here. It was up over 11%, and then it pulled back on Wednesday and Thursday. It was up 10.7%. So not bad for the Nasdaq, but it's also behaving exactly as expected, is because in the new uptrend, a lot of the safe haven large cap tech stocks were the drivers of the market. And that's, the Microsoft, the Apple, the Meta, and I'm not going to go over those today. But, the Magnificent Seven, or add Adobe or Netflix, you can make it the Divine Nine, whatever. The larger cap stocks were dominating. And now we're starting to see, last week we saw a divergence into the smaller cap stocks and mid cap stocks. This is the IWM, or the exchange traded fund for the Russell 2000. You could see the big volume on Friday, but it did have this push here, which is why you can't ignore these big volume pushes. On what day was this? The 14th, the day that the benign inflation data came in. Then it kind of made a little shelf-like pattern. And then the last 3 days, it really picked up here on Wednesday and Thursday, when the Nasdaq was pulling back. This thing was just going sideways, and Friday just exploded higher. So like Phil Lesh says, we'll take a step back and look at this one, kind of like a base on base pattern here, but it's still consolidating. And I believe, I don't want to predict anything, but I believe there's a good possibility that now we see this shift from the large mega cap into the more riskier, growthier names. And I'm going to go over them here, specific names today, and not just review, the Magnificent Seven. But you can see this is setting up to make a larger move, I believe. You could see a long period of consolidation, big shakeout, and now it's starting to move higher. And that 198, see if it gets above that 200 level soon. As this shift from the large cap stocks to the small cap stocks, we'll see if this sustains itself. We could have a sustainable rally in these stocks. Anyway, like I said, I'm not going to go over the groups. I like the home builders. There's a lot of stocks in retail, like Deckers. I go over them every day. Abercrombie and Fitch. There's industrials. There's a lot of software names. There's just a lot of stocks that are breaking out. A lot of them are smaller stocks, but I'm just going to point out a couple of things. I'm going to start with CrowdStrike, because it's a stock I own and a stock that I like, but I'm going to do a Bob Weir and take a step back. And you can see that this thing IPO'd. Now, I'm looking for not only singles and doubles, but from home runs and grand slams here with some of these stocks that I'm going to point out. I'm going to go through about 20 of them. And CrowdStrike, it had its IPO in 2019, and it, undercut its IPO low and then rallied like everything else in 2020, 21. And then it sold off like everything else in the bear market. And some of these software names just got oversold. That's the old term, the baby out with the bathwater, so to speak. But CrowdStrike, during the Nasdaq pullback of what was it, August, September, and October, where I showed you that 12% pullback, this thing was being accumulated in here. And I think that's a pretty important point, because when they reported earnings this week, you thought they might sell off, but we saw investors come in and buy it up some more. So I think this is definitely one to watch, and I like this. Now remember, this is a monthly chart here, but I like this pattern here, and if it could do something like that and blast higher, I think CrowdStrike can take out its old highs. Yeah, I know I'm a dreamer, but I'm not the only one. And this is the price from November 21, when the Nasdaq topped and Jerome Powell started rising interest rates, and it was near 300. So yeah, I think it could definitely get back to that level. Anyway, that's just one of the stocks. I'm going to go over a lot of them here, so if you get bored, you can shut the video off. But I have a lot of these stocks that IPO'd in 2018, 2019, 2020, 2021 that had a nice run, sold off, and now they're starting to get some love again. And you can see here that Zscaler, even though the Nasdaq pulled back 12%, this thing was just trading sideways, down 2%, flat. It was even up in October 2%, and in November, a nice 25% move for Zscaler. So this is the type of stuff that I'm looking at because I think the growthier names are going to be in vogue. This is Uber. They IPO'd in 2019, definitely undercut its IPO price, rallied strongly, and then suffered like every other growth stock in 2022, and now is starting to get some love again. And then last night, I guess it was mentioned they're joining the S&P 500, and there's 3 going in: Builder, First Source, and Uber was one. And Solar Edge, I know, is coming out. But you could see this double bottom base on the weekly, and if I go to the daily, this thing's extended. But it had this big move here on earnings, I believe. But prior to that, it had this big push. I don't know. This might be earnings, and it had more news. It doesn't really matter. The point is that you don't ignore, when it's consolidating in a base, you don't ignore these moves that are rallying through the 50 with big volume. Yeah, I believe that was the earnings date right there. And it's just taken off now, and you just ride the wave, right? I mean, if you own it, there's no sell signs. Could be a big winner, could get back to its old highs. We'll just have to wait and see. Yeah, it doesn't have very far to go right now, but Uber's another one that I like. Not actionable, I don't believe here. It's a little extended. DraftKings is another one that I traded and I sold it. I don't know why, because there's no sell signs here. It just broke out and then pulled back to its 10 EMA. But once again, an IPO in 2019, yeah, it was a SPAC, I believe, so that kind of turned people off. But you could see how much this thing sold off, and now is starting to get some love again, and definitely could take out new highs here. There you can see the stage 1 base makes a move, stage 2 base. So maybe it'll do something like that once again. Very likely. That was DraftKings. The next one I like a lot is DUOL. Definitely a chance to have a home run here. You already have. It was 205 back, right after it IPO. It had a little consolidation, ripped higher. Then, of course, the Nasdaq and everything else just sold off in 2022, consolidated in a base, and now ripped higher, formed this double bottom base pattern. This is a weekly chart of DUOL. It's a weekly review. And then it pulled back and then just ripped higher here on earnings here on November 10th. There's a big gap higher. And this is why we pay attention to power earnings gaps, because, well, in this market, they're working. Obviously, last year they weren't. So that's also an indication of market strength and the health of the market. Our breakouts are working, a lot of them. So, and I'll get to more of them later. Datadog, this is one that I want to buy right now. I don't know why I haven't. Just brain fart, I guess. But you could see when it IPO'd here in 2019, right before, a couple months before COVID, and then COVID hit, and this was one of the big darlings of 2020, 2021, but of course topped out in 2021, with the rest of the Nasdaq, which topped out in November and then sold off like every other one of these stocks. But now it's set up in this long base, and this is why I like it. It's got this cup-shaped pattern, then it pulled back, real, vicious handle that shook a lot of people out, and then just ramped higher. I'm going to get to that on the daily. There's your daily chart, and this is why I say we pay attention to these breakouts. They're working. When the stock's up 28% with, we're, nearly 600% above average daily volume, you can't ignore that. And it's just riding higher. So you ride the wave. But like I said, if you go back to the weekly chart, this thing's just set up near, a standard buy point. I mean, if you didn't get in here, I don't think it's too extended or too unrealistic to think that you could buy it here and it will go higher. Could be a big home run grand slam stock. Cloudflare is another one. This one I rode in 2020. Don't want to brag. Don't brag, Marty. Don't be an idiot. This is probably what you would consider a rocket ship, where it just, it opened and then it just went straight up and topped like everything else. Very familiar theme here. And so it's shown the ability to make big moves, sold off, consolidated for a long time here. And now it's starting to break out of it. And to me, this is still near an actionable area here in this 18-week cup-shaped pattern, stage one. This looks beautiful here. It is on our ready list here, and I believe it's ready to make new 52-week highs. That's not important. Just trade higher, okay? It's going to trade higher. It's 1% off its 52-week high, so it better do that. But anyway, that's another one. Palantir, I know this is a pretty controversial stock. Some people hate it, some people like it. I just want to make money in stocks, and so Palantir is one of these that IPO'd a little later here in 2020, but it had a nice run. This is definitely a rocket ship, traded from 80 to 45, and then sold off. It sold off early. It was ahead of the game, right? It sold off in the first part of 2021, and then when the Nasdaq dumped, it really took. It went with the Nasdaq, formed a consolidation pattern, then broke out in the summertime, and now it's consolidated in another stage two base here, which I like, which I think is actionable, and I have it on my ready list. And yes, I actually did buy this stock and own it, and I think it's going to go higher. That's why I buy them, because I think they're going higher. Anyway, DoorDash is not something that I've ever used, but I know it's popular with the younger generation. You can stay home and play video games and have DoorDash deliver you your goods. Anyway, same theme here, just sold off with the 2022 nasty bear market. Had formed this little bottoming type, rounding bottom pattern, made this, base here, broke out, made another little double bottom consolidation here and is starting to move higher. I think it's a little bit extended on the daily. Yeah, but still forming this, shelf-like pattern, which I kind of like, and it tried to move out of it here on Friday. So that one could be on our ready list as well. I like DoorDash. Monday, another one, software name. This one really another rocket ship, in 2021, IPO. Let me get the week here. June of 2021, just ramped until went up $450, man. What a move. 155 to 450. What a move. And then sold off. Okay, so it's shown the ability to move and then sold off, consolidated for a long period of time. And I would still consider this a stage one because it's a base on base pattern. This is a stage one base, and then it kind of pulled back now. You can see that sharp pullback, and now it's starting to move higher. They had earnings last week, I believe, or they had earnings recently, and it was well received. Maybe the earnings were here on November 13th, but definitely another one. Could be a home run, double, triple home run, or even grand slam stock for us. Bentley Systems, this one's a little slower mover. It's in the software design with Cadence and Synopsys. A little slower mover. when did it IPO? I think it was 19 or 2020. Okay, so this one IPO'd and this was a rocket ship, like a lot of stocks with the accommodative situation from the Fed and the government spending. So it had a nice run and then topped out in October, right before the Nasdaq, and just consolidated for a long time. Started to show strength, and now it's got this little cup with handle pattern here, and it just can't break out of it. I think eventually it will. There you can see it on the daily chart, but yeah, definitely one that I am watching. Is on our ready list. Allegro Microsystems. This one is it IPO'd in 2020, December of 2020, I believe. Good time to IPO, October, and it just was a rocket ship. Went straight up, consolidated, oops, and then made another big base. Had a nice run up to $52 in July of this year, and it's just fallen out. But I wouldn't give up on it. I think this is just forming another base. This is a semiconductor fabless stock, so there's a lot of competition here. But it's got some sales and earnings. So it's not a fly-by-night stock. I'm keeping this one on the back burner because I believe this is a bottoming pattern. It's going to get some love eventually. Allegro Microsystems. Airbnb, I don't really like their business model, but I just wanted to point it out. This was a IPO in December of 2020, obviously a rocket ship, and then formed this base and then sold off like everything else in the bear market. Now it made this move up, and it's had this double bottom base pattern on the weekly chart. You can see this here on the daily as well, pretty pronounced. On Friday, broke out of that little bull wedge pattern there. So that is a nice little pattern here as it pulled back to a moving average on light volume. But yeah, this could be another one of those home run stocks. So that's why I'm bringing these up. That's it. If we get that sustainable shift to these smaller cap stocks, they could be big winners. This is Unity. This one was, again, IPO and just ripped higher, but then sold off with the bear market, formed this little consolidation cut pattern and sold off, I believe, after an earnings report or something. Yeah, that's a nasty sell-off. But once again, it's forming this bottoming pattern. And, I wouldn't be surprised to see this thing trade above the 200 and get back up to that 40 and even 50 level. Unity Software, and just another one, it's got earnings, it's got good revenues. So just keep it on the ready watch list. AFRM, this one, I feel bad for this one. One of my friends bought it right before, it IPO, then it had this cup shape. And she bought it and just held on to it. I said, I'm going to sell it. And then she, I talk to her every now and then. Yeah, just, like everything else, sold off with the market. And now it's starting to get some love. Maybe it'll get back to even and she can cash out. But she likes it. She's going to hold it, and had a nice week last week. Anytime you're up 43% in a week. But yeah, you just got to, a lot of people believe in this stock. She believes in it. So it's got some, earnings. It's got sales growth, so we'll see if it can deliver the 31 cents. If it can convert from, losing money to making money, then maybe they have something there at AFRM. Upstart's another one. I don't know what they do. Doesn't matter. I just know that when it IPO'd, it was a rocket ship and went up to like, what is it, $400, and then sold off like everything else. Is a very common theme here. Made this big move up and then sold off again. And this is a weekly chart, so I got to go to the daily. And you can see this bottoming pattern here. Made a move on Friday, not to be ignored. That's a big move, 21%, 200% above average daily volume. Got above that 31.43 level, so that is definitely a level of interest. That one may be on our ready list as well. And a couple of more recent ones. Oops, no, just one, I think. Shark Ninja. This is one that my wife and I have their products. We didn't even know it. I didn't even know about this company until some people brought it up to me on Twitter. So I researched it. It looks good. This is a weekly review, so I got to go to the weekly chart. You can see once it IPO'd, it ran straight up and then formed a little base there, and now has moved higher the last 3 weeks. with some decent volume. So Shark Ninja, this is one with legitimate earnings, legitimate return on equity, lots of sales. This is an established company. And the other one was ARM, which I believe is insanely richly valued, but you can't ignore this chart pattern here. This IPO, it's trading about 20 times sales. Yeah, this is not a micro cap stock, 65 billion market share. So, yeah, I just wanted to point out this chart pattern. And that's it for me. Thank you for watching this week, except for I lied. I have one more thing. I mentioned how the breakouts are working. A couple things. The theme is stocks coming out of the 2022 bear market, smaller cap, mid cap that are getting love. And then the breakouts are working. So this has both. This has the, the sell-off, the consolidation, and this IPO base here. I believe this breakout here from 3141 from December of 2021, it's nearly a 2-year base here that it's breaking out of. And this is not to be ignored at all. This is IoT, Samsara. You could see the RS line just ramming through all averages. Up 27% last week with 158% above average daily volume on the weekly. On the daily, though, you can see this move, 25% move with over 500% above average daily volume. That is a breakout, not to be ignored. And so, yeah, I bought IoT on Friday. I had it on my ready list at my site, and I had totally brain fart on the earnings. They had earnings Thursday. Thank goodness they were good, and people didn't get burned on it. So, yeah, I mean, sometimes you get lucky, sometimes you get lucky. But I bought it on Friday after the news, after the breakout. I brought it in pre-market. It was trading like 31, and I knew that 31, the old 31 buy point. So I bought it at the buy point. So anyway, trying to do things right here. Path, did I show this one already? I don't know if I did or I didn't. But anyway, my point is, I'll go back. What the heck? I don't think I did show this one. Anyway, if I did, it IPO'd at the wrong time, sold off with the bear market, made this long consolidation. That's a lot of consolidation and breaking out from this this old buy area from 2022. So you're looking at 16 months, 15 months of consolidation, so even more so, even going back here. So that's a huge breakout for UiPath software stock, up 26% with 625% above average daily volume. One thing that I didn't show you with IoT is the closing range, 87%. I like them to be above 75% when they break out, and IoT closed at 97%. That is quite the hammer. And the last one I'm going to show is ESTC. We had this one on a leading stock list, but then it sold off below its 50, and I took it off, but I did not ignore it. I knew that earnings were coming up on this one, and it just formed this little flat shelf type pattern below its 50, and just right before earnings, a day or two before, it rose above the 50, and maybe somebody knew earnings were going to be good. I don't know. I'm not a conspiracy theorist, but it blasted higher. This is once again an IPO from 2018, so it's a little more seasoned than some of the ones that I showed you, but no doubt about it, this one could get back to its old highs from November of 21, which is what is that, 180 now 190. So yeah, just because it had this big move, don't ignore it. Like I said, don't ignore these big moves, because it could definitely move higher. It closed at 89% of its daily range on Friday. So that is it for me today. Thanks for watching. I'll get back to my, retail stocks like Deckers and, the stocks that I also own and like. But I do believe we're having a shift from these large cap stocks to the, the mid cap and smaller cap stocks. And I hope that it's going to last. And if it does, we have a lot of stocks here that are positioned that we're watching and on our ready list at mcstockcharts.com. We never give up. Thank you for watching.